So we are happy to be joined via phone, a currency analyst, a very respected one as such, to help us understand what's happening to the performance of our city. Courage Boti is his name. Courage, good morning. Thank you very much for joining us on Good Morning Ghana.
Good morning, and good morning to your listeners. Yes, I do currency analysis, but I'm an economist with GCB Bank. I think that's a more appropriate
Right.
Yeah.
Okay. So economist and the currency analysis, that should suffice.
Definitely, sure.
Thank you. Thank you so much, Courage, for talking to us on Good Morning Ghana. So, briefly, help a 10-year-old to understand why Ghana's Cedi appears to be doing so well against the major trading currency. Here we're talking dollar, euro, and the pounds. What exactly is what's happening to the Cedi?
Well, good morning again. Three things. One, we know what happens post-elections. Some good work around building good fundamentals for the Cedi has started in the past administration with the introduction of the gold for reserve policy. Through that policy, we built from about 8 tons, now a total of about 30.5 tons of gold. If you put it monetary value on the books as reserves, that has given us, as we speak now, reserves in excess of 9 billion over 4 months of import cover, really, from the low levels we had prior to, or in fact, in the immediate aftermath of the debt exchange and the economic crisis that we had and all that. The IMF says at the current level, and you look at the data, at the current levels, we have reserves that is more than twice what we are supposed to have by end of the program in April 2026. So one of the legs of confidence is coming from there. But of course, with all of what happened in the past and in the sentiments around the past administration, the impact of that fundamental improvement in reserve wasn't felt so much in the FX dynamics on the market. There is a change in government, new vibes, new sentiments, positivity around, all of that in the honeymoon effect, plus they came out with a budget that sought to be pursuing fiscal discipline to a very large extent, and this resonated well with the market. In fact, even with the slippage that was reported last year, the fiscal agenda alone for this year and going forward seemed to be enough to convince the IMF to ignore or waive the missing of some of the fiscal targets, which are fundamental for the fourth review, and we passed that review. So that is one leg of event that is supporting the Cedi's current trajectory. Another leg of it is we know what Donald Trump and the U.S. government has put across as a tariff regime that is targeting almost all economies. Some have as high as 50% tariff. In fact, the retaliatory responses are even taking some to over 100% for economies like China and stuff like that. So all those dynamics are breeding the notion or the thought of a potential global meltdown this year or next year or sometime soon, and its ramifications for the globe. That is resulting in a weaker dollar against most major trading currencies, the euro, the pound, and almost all the major currencies you can think of. So on another hand, that policy intervention from the US, which doesn't seem to find favor with the globe, means that the USD is getting weaker and weaker and weaker, and the Cedi is profiting from that. The third leg of the argument is that the Bank of Ghana, through the policy rate decision, have shown a stance that they want to be tight, they want to be more disciplined, they want to tackle the inflation thing heads on. And since, I think, prior to election and post-election, we have seen a bit more intervention on the market in terms of liquidity interventions. And even if the volumes have not been as much, the Bank of Ghana, in recent months, the Bank of Ghana's commitment has been that we stand ready to meet every demand on the market, and as and when required, they come through with liquidity. These factors combined, and I think more on the trade war thing and its impact on global currencies, as in the USD weakening and then global currencies, plus the moderate fiscal adjustment we've seen in expenditure, in trying to raise revenue, and the whole tone at the top around the fiscals and all that seem to have combined to bring some confidence in the market. And I believe that is what underpins the kind of trajectory we are seeing in the city.
So clearly from what you're saying, it's a mixture of both what you call local and foreign factors. Exactly. With the domestic and, for that matter, foreign factors that have come together to shore up the strength of the cedi.
Exactly.
Okay. But there are also mixed reactions. There are those who are happy that the cedi is appreciating and the dollar appears to be weakening for obvious reasons, because what it means is that the prices of imported items would hopefully come down. And I'll cite the example of, say, fuel, okay? And we all know what the knock-on effect is if fuel comes down. Now, but there are also those who also say that now that the cedi is appreciating and the dollar is weakening, I loaded up my dollar, say $100,000, which I had hidden somewhere, either in my account, dollar account, or in my home or wherever. And now that the dollar appears to be weakening and people are going in for the cedis and not the dollars, what it means is that I am racking up losses. I mean, as a currency analyst, what would you tell somebody who has a lot of dollars hidden somewhere and are unsure whether to go and, sell that dollar or to keep it?
FX business is one of the riskiest business you can find. In fact, if you are likening economics and markets to maybe the human body, the first sign that someone is sick or not well is actually their probably temperature and the BP and all that, right? And so if the economy is doing well, you will see it reflect in FX. If it is not doing well, you see it reflected in this. I'm trying to say FX is one of the most risky, volatile business you can do. So for starters, anyone who is going into that with the motive of making profit should bear that in mind. And it so happened that in our country, the only thing we know is depreciation and not much of appreciation. So it makes sense for people to continually buy dollars because, last they'll make a gain, right? And so it's been lucrative. Are we out of that phase? It's too early to say we are out of that. In fact, nothing suggests that we are out of that. This current momentum is really something that has just started nascent. We need to watch it evolve. But the crux of the issue is that FX business is volatile. It could go up, it could come down. What we are seeing now is a correction. So if you are versed in that business, you know you could make a loss, and you should know when to sell and when to buy. In fact, another leg of the appreciation, you call it the domino effect, right? Where all those who bought FX at maybe 15, 16, and then all of a sudden it's tumbling, it's time to sell because you are making losses. You cut your losses and then hope that it bottoms out at some point, then you buy it low again. Then you neutralize your loss. I think that is the strategy a lot of FX dealers do use, right? So at a point you bought, when price is going above a certain, you should have a notional target price or strike price. Above a certain point, you are keeping, below a certain point, you are selling. And then you sell when it's going down to buy when it is bottomed out, so that you hope for maybe a rise again. And so for all of those who are holding FS now, the uncertainty in the global market, the dynamics of the domestic market vis-a-vis policy direction, and then all the interventions with the gold board to structure the gold for reserve program now, bring more transparency and all that. It looks like we are building a certain structural momentum to support the cedi2 stability. And so if you are holding on to FX with the hope that it will get back to the previous levels, maybe it is not the wisest of decisions. You are better off rather selling, and from a pure business trading perspective, when it bottoms out, then if you need to buy, you buy again at those levels. That's probably will be a good strategy. And those sales, those speculators who are now selling for those reasons, are the domino effect I'm talking about. So they will add to the supply on the market and then reinforce the appreciation of the city, which is what is happening. So to answer your question, if you are holding on to some effects now, I think it's a good time. You have missed a good time to sell it already, but the next best time probably is now. And then if you have to buy, you buy again when it is at bottom.
I see. If you were to apportion any kind of percentage to the biggest influencer of the performance of the cedi, would you say that it is more to do with the endogenous factors? You've talked about the gold board, the setting up of the gold board, and the fact that we've stored a lot of gold and so on, which is shore up, which has anchored the strength of the cedi, and some other fiscal restructuring that appears to be taking place, which have all helped. Would you say that those are, would you say, major factors, or you would say that the Trump, trade threat, which some say is a triple T, would say is the major cause of the performance of the cedi, and we are only beneficiaries of it? And I'm asking you this because, as usual, the politicians have started. If you go on social media, depending on who you're listening to, this, government has done nothing. It's about Trump and what he's doing with the global trade war and so on and so forth. It has nothing to do with what we're doing here internally. From where you sit, is it more to do with exogenous issues or endogenous?
Well, I must say my response is anecdotal, in that I haven't sat down to look at hard data to say it is this percent or that percent. So I would shy away from even assigning percentages and all that. But from my anecdotal, and I'm doing actually an event study, and I can actually draw on the trend before and after when the Trump policy was announced. In I think January, and towards the end of, I think the Bank of Ghana data speaks to that, right? The cedi depreciated, I believe, in the first few months of the year, but at a slower rate. So I think the depreciation was just about 3 or so percent, or 5.7. I'm not sure what the rate is now, but if you look at the Bank of Ghana's March 2025 summary of economic and financial data, you have a sense of what the level of depreciation of the cedi was by that point. It wasn't an appreciation, it was more stability, and a very mild depreciation relative to our recent history. The momentum we are seeing currently, and then the sharp correction, came after the Liberation Day announcement. So if that is any indicator, you have a better sense of what the triggers are. But of course, around that same time, or not long after the government puts out its budget, was also when that announcement came up, right? Or just around the same time. So there is some, if you like, what's the appropriate term, intervening factors in there that need to be disaggregated to make a definite call as to what percentage is attributable to this. But from what I see from what is happening to other global currencies, not just Ghana cedi, but other global currencies, including the pound and the euro, the yen, the renminbi, and all those other major currencies against the USD, it is the external factors that is driving more the trajectory. And you see, I think it's even healthy at this point if the politicking, at least opposition, want to feed on this argument, feed on it. But the current government need to be minded by what Dr. Baumia said after first 100 days. When we have seen the same kind of trend with some interventions and some spin leading the cedi to some appreciation, and then some stability of sort, and then the comment that we have arrested the cedi and gave the key to the IGP, and subsequently the events thereafter, and how it actually made nonsense of that kind of utterance. If I were Dr. Tuforsing and then the government, I'll be minded to take credit for this and to rather see to sustaining it to a reasonable period where we've observed the trend over a longer period then we can make a definitive call that maybe due to XYZ policy we've intervened, we have dealt with the currency depreciation problem. But if we feed on the trends as the time will stand, no one envisaged COVID coming, no one envisaged all the economic events that probably would have led to the debt exchange and the reversal of foreign capital in the local market in 2022 and 2023. The warning signs have always been there. I mean, no one knows what is going to come next and how that is going to shock us. We haven't built resilience, in my candid view, to enough to say that we've dealt with the FX problem. So yes, some things are going on, and there are some domestic factors, policy orientation that is supporting the move. But clearly there is a global noise or global trend that is not peculiar to Ghana, but to everybody. And I dare say that is more, the weight tilts more towards that than what is happening locally. And the evidence of Q1 Cedi depreciation, 5.3 or 5.7, something thereabout, shows that the trend of appreciation we are seeing now is not exclusively to the policy orientation of the current government. But I will stop short of putting percentages to them.
Right. Now let me ask you this, my penultimate question, and let's do this briefly because my guest again. Can we at this point say that the Cedi's resurgence also means that the Cedi has regained its role, or its, let me use role for now, as a store of value? People see the Cedi as the currency, as Ghanaians, as the currency they must hold on to and not the dollar for purposes of trading and so on. Can we confidently say that, or you still think that it's early days yet?
It's early days yet. That question will be answered with time.
Okay.
And I just again want to remind you about just before we announced the IMF deal, the current one, the Cedi soared to about 15, 16 in that year. And then before the year ended, it decelerated to about 11.9.
Okay.
But it went quickly back to 16 levels and all that. It's the sentiment on the market. It's how the market interprets what you are doing, the data behind it, and its sustainability. They will test you at some point. Okay. After there is a correction, there will always be a test where market will want to test your resolve and how resilient you are. And so that is why we must quietly build resilience and ensure that when those moments come, we are able to deal with it. Until we answer those questions, I think it's early days here to someone to attribute a turnaround in the Cedi story. Okay. We are enjoying what is happening. It is volatility. Not everybody likes it. The traders will not like it, and the exporters will not like it because it means their goods are no more competitive. But then, for us, the consumers and the general populace, we like it. And long may there be, in fact, it's not good for anyone for the volatility. We need stability at some point. So let's go to where an optimal level is a good value for the Cedis, and let's ensure stability there. Now the test case will be how Bank of Ghana, the Ministry of Finance, and all the actors can sustain it around what we call a fair value of the Cedi. Okay. Then we can talk about store value. Thank you.
All right. That's finally. Let me also my final question to you. And in our conversation so far, we've looked more at the impact on this on private businesses and investors and so on. And I want us to end our conversation on the fiscal impact of this on a country like Ghana, because we're also exporters of all kinds of things. Now, when we export, we earn dollars. Now, this dollar we're earning has lost value. What would this mean for our fiscals in terms of our revenue? Remember in 2015 when the prices of crude oil dropped, plus, of course, the energy crisis that we faced have been cited as the two main reasons why we had economic challenges in 2015, 2016. Now, if you have a situation where prices of crude oil have not fallen drastically, but then we have a situation where the dollar has lost its value, what would this mean for Ghana's revenue in general?
Well, yeah, an important question, and it's important we disaggregate the issues. Yes, we have run a trade surplus for, in fact, the last 8 or so years. And so if your Cedi is correcting sharply, it means your exports are becoming uncompetitive. But in the grand scheme of things, let's look at the current account in total and what. So our current account bar 2024 has always been in deficit. It's in deficit because, and we have run trade surplus for all those. So trade surplus, a current account is made up of both the merchandise trade and trade in services, right? So we've run surplus on trade in goods, but trade in services, which is the services we import, the services of contractors, and the many other things we import, we pay a lot more than we send out. So net, we are a deficit country when it comes to current account. Bar 2024, which was a year we were not paying interest on our loans and all those stuff, so it gave us some respite, some room to operate. So in this current moment, let's look at the debt stock. The foreign stock of debt is more than the domestic, and we have had a surge in the debt stock to the levels we've seen, the 700 billion plus, not necessarily because we have borrowed 700 billion, but because every foreign loan you take, which is denominated in the dollar or any other currency, with every percentage of depreciation, the value of that loan or the obligation increases. And you have to look for the interest rate may be the same in dollar terms, but you have to look for more and more and more cedis to pay the same interest. All of that put burden on the current account. There is a reason you see it in deficit. So if the CD is correcting, we need to look at where is the heaviest impact. It would impact trade, but what is the magnitude versus what impact it will have on our debt servicing, foreign obligations, even outside of debt servicing and paying principals and all that. And I dare say that with the size of the external debt, with the debt service obligation to the externals, and then the other obligations that come not even to government but also to the general economy and all that, I think that the impact net will be a positive one on the Ghanaian economy because it would have lessened our debt service burden. And an example would drive home. If you took a loan, a 1 billion loan at 5% interest in dollars, that 1 billion is 1 billion if your CD dollar exchange rate is 1:1. Okay. By virtue of it jumping from maybe at the time you took it, maybe 8 cedi to a dollar, to now maybe 16 cedi to a dollar, your $1 billion loan, which would have been at 8 cedi, maybe 8 billion, it is now all of a sudden jumps to 16 billion. And that 5% interest on a billion, which could have been maybe probably just about 500 million, or 50 million, all of a sudden jumps to 100 million without any extra borrowing. So if you see the CD correcting against the USD, it means that instead of paying now 16 billion with the assumption I've just put across, your obligation is coming down in CD terms. And instead of coughing up 100 million to pay interest annually, it will be coming down. Okay. You need to look at the totality of that to assess the fiscal impact. Yes. And I dare say that it is more on the benefit is more on the debt service and external obligations than it is than the negative impact on that trade account. Reason being that most of even the trade, the export, the oil, the gold, do not belong to Ghana. To be fair, foreign ownership of those assets are more, and so the impact is even less on revenue for government than it is for those operators in the system and all that. Okay. So I think the positive impact is more for Ghana than the negative. I mean, if you look at the totality of the picture.
All right, that's fine. It's both a loss and gain, but if you net it off, it's more of a gain for us. I get the point you're making. I want to thank you very much, Courage, for your time. It's always a pleasure talking to you. Courage Botti is both an economist and a currency analyst. Have a good day, sir.